It's really been a busy period for you, be it the pharma deal. You've also made large investments in other companies as well. Does it look to you like you're at peak activity levels, or heading into the new year, are there still a lot of opportunities that you're looking at and planning to pursue?
Great to be here again. I think it's both, actually. You know, the activity levels now are at record highs after a very quiet Q2. Q3 and Q4 have been incredibly active, both in the public markets and the private markets. Looking into next year, you know, we see a record pipeline of new investments that are coming from basically all sources, and also a record pipeline in private equity in general of exits as well. Of course, we're still trying to have our feet on the ground, given that we're still in a pandemic, but activity is extremely high.
Extremely high activity. Well, I wonder what type of activity that's going to be. Your announcement yesterday of Recipharm was a take private, but there's been a lot of criticism that those don't look attractive because valuations are so high right now in public markets. What do you say to that argument?
Yeah, you know, the way that we think about valuation is a little bit different. It's not necessarily what the company's valued at today. It's rather, how can we create value with this company for the long term? So what can we do to this company? How can we help it transform? How can we help it become future-proofed? How can we help it serve society in an even better way, and then create value once we exit, which is 4 or 5 or 7 years down the line? And that's the same thinking we have around Recipharm. We think it's a great platform, but we think as a private company, we can accelerate and build on that platform in a faster way.
Christian, if we're going to talk about companies that could be better as private ones, I definitely can't let you go without asking about KPN, something Bloomberg sources have said that EQT is looking at. Can you confirm to us, is that a deal, the Dutch telecom provider, that you would be interested in?
Yeah, unfortunately, I can't comment on live deals or potential deals or anything that's speculated. I can only comment on those deals that we have announced that we're working on.
Fair enough. What about the sector, though? What about Broadcom, Telecom? Is that something you're interested in?
Yes, telecoms in general. You know, we're already one of the world's largest owners of broadband fiber. We took Zayo private last year in the United States for $14–15 billion. We have one of the largest broadband fiber players in the German-speaking region called Annexio and Deutsche Glasfaser. We put those two together. And they're actually rolling out fiber across rural Germany, which actually is quite important because there are a lot of people who don't have access to real broadband and good internet service there, which is of course essential during the pandemic. So we like that the overall telecom sector, but on the whole we're more focused on the future-proofed broadband fiber area.
Christian, if I can go back to something you mentioned earlier, talking about peak deal activity and exits as well, IPOs, they've been hot. We had Airbnb and DoorDash in the U.S. to much fanfare last week. Do you think that this is a good environment to be pursuing exits?
Yes, absolutely. The IPO market is already twice as active as last year. And like I said, Q2 was pretty quiet. So we've seen record activity, and then you have all the SPACs on top of it. Actually, we took a company public in the United States last week on Friday on the NASDAQ, a company called Certara. It traded up 60% or something like this and ended up being a fantastic investment for us. We still own a large part of the company, so we're going to follow it on the stock exchange. But I think we made something like 9 times the money. And it was, again, in a very future-proofed sector. This is a company that makes software to analyze how drugs interact in the body. So I think not all sectors are hot now, but those that the market believes will come back quickly are getting hot again, and those that are really there for the long term have been hot for months now, and I think that will continue. So
what sector's not hot right now then?
Well, I think if you look at, let's say, the oil and gas sector is a complicated one, right? You have the decarbonization wall coming closer. You have the drive towards sustainability, renewable energy. And you still have some parts of the leisure sector, which are in travel sector, where we don't really know exactly when is that market going to come back. However, Airbnb, people really believe in that business model. So if there's conviction, you can get something done.
So, Christian, in terms of things that are hot, one of the things we're looking at right now, a chart of ESG fundraising really picking up over year after year for private equity. I know this is something you care a lot, but how does EQT differ in terms of your competitors when it comes to ESG offerings?
Yeah, when EQT was founded, we had the motto EQT more than capital. So we've always been, we've always tried to be a really responsible owner, really working with the companies to develop them in the best possible way, also considering all stakeholders around. Now we say our purpose is to future-proof companies and make a positive impact. And we've even inserted that into our articles of association so that we really have to work with not just how do we create financial value with this investment, but how do we create value for all stakeholders. And actually, we think that's really symbiotic. Because if you look at two companies that are exactly the same, and one can become more sustainable than the other, which one will attract the best talent? Which one will have the best relationship with regulators? Which one will have the best value chain or the most future-proof value chain? Well, we think it's the more sustainable one. And therefore, we actually think those will be the best investments going forward. So that's how we think about it really holistically.
Right.
Mm.
Christian, just finally, I know when we've spoke before, you are not a fan of SPACs, but Goldman Sachs says that there might be about $300 billion worth in the next 2 years. Why is this problematic to you that we're about to see so much? And just quickly here.
Yep. Well, SPACs, there are a lot of conflicts of interest in the SPAC. There are a lot of fees going around, at entry rather than over the long term when you create value. So I think that's one of the major challenges. And then you don't really know who the owners are going to be. You don't necessarily know if the team who's running the SPAC will be able to handle the company in a great way. So I think there are a lot of questions around it. I see that it's a great tool, but it's also something I think we need to be watchful for.